Welcome. On this episode, my name is Anthony, and yeah, I'm gonna be teaching you all through this course. All right, and please, if you are very new, very fresh to this industry, to trading, I recommend those books. I'm recommending to you. You try and read them before or after watching this particular episode moving forward. All right, so you'll be able to flow with the tide. You'll be able to flow with every other thing I'm going to be teaching. All right, so this particular class will be teaching you or talking on um, basically price action, you know, market patterns, and all of those stuff. Because if irrespective of being a smart money trader, you still need to understand those chart patterns, because when you understand them, you can actually use them to your own advantage. Okay, so that is it. That's the more reason why your understanding of chart patterns is very crucial. So there's a book recommended for that. You have to read it and read the introduction to forex trading. You know, different things that you really need to know about. Those are prerequisites. All right, and this class, though, it's even also a prerequisite, and for some time you'll be learning some prerequisites you need to, be able to trade SMC, smart money concepts. All right. So yeah, for this particular class, let's move forward. So we're talking about chart patterns. Okay, and today we are discussing some chart patterns you probably know already or heard of. Even if you don't know them, you probably must have heard them, and they are really very simple. Okay, um, they're really very simple. So let's talk about price action. What exactly is price action? And I'm not going to be going into much details because you have to read that. Price action. What exactly is price action? Now, the word price action is simply how price move. All right, price takes action. All right, the way price move when individuals or the players in the market um act. All right, when they act, when they do something, when they buy and sell, when they act and react, you get to see the effect on price. So price action is a way we are able to read human sentiment when it comes to the market trading in general. All right, so those patterns have been studied for years, and experts have been able to tell us that when you see something like this, it means that the market is going so this direction or this direction. Anticipate this direction, or you know thereabout. So this is just, in my own word, what is called price action. So entirely everything depends on price. All right, you can have your candlestick patterns, your doji, your morning star, evening star, the harami pattern, marobuzu, the engulfing candle. All of these things are just chart patterns that tell us what next, all right? How the market's gonna react next. So when there's action, there's also what equal and opposite what reaction. So that's entirely what it is. And when we talk about price action, there are different chart patterns we use, which is the triangle. We have um we have the double top, the um double bottom, triple top, triple bottom. We also have the yeah, I mentioned triangle, bilateral triangle. We also have the trend lines, support and resistance also it's also price action, all right? Even though it's not entirely a pattern per se, but it's an action, all right? It's an action depicted on the charts, okay? Telling us something, okay? So we have several chart patterns. Okay, you can have a curve, you can have something like look like a cup and handle, you can have your flag, you can have your wedge, rising wedge, falling wedge, you can have so there are many, all right. So just read the book and then you get that. For the sake of this class and what I'm going to be looking into should be the support and resistance because as a trader, you should understand that aspect pretty well. You should. So the support and resistance is very, very vital. Even though some persons say in quotes, price when you're trying to use support and resistance, it doesn't work. Well, I would say that even the smart money concept is based on support and resistance because it's talking about supply and demand. And what is supply? Supply is essentially a, a resistance zone. All right, it's essentially a resistance zone. Even though it's not kind of obvious, but it's a resistance zone. And then demand, it's also a support zone. So, I mean, frankly, we all have been using support and resistance. So it's just that some persons use it the wrong way, some persons understand how to use it in their own advantage. Some persons like, okay, let's wait for liquidity grab, let's wait for this, so we then get taken out. This and so so let's just cut the long story short and talk about price action with respect to support and resistance, of course. So yeah, support and resistance. So we are talking about support and resistance. Support. We can't be talking about price action without talking about support and resistance. So what is support? Just like in your normal English language, support is usually something used, to do what? To wedge something, to keep something in a particular position, something that you use to ensure that um, something is fixed, not exactly fixed, but it's kind of a restraining or um, you know, in your actual world, you're just trying to ensure that something doesn't go below or below a particular area or something. So maybe you are trying to stand something and then you just use other materials to support it in order for it to be able to stand, all right? Or someone trying to raise up their hand and then getting support from others in order for them to keep firm. So support is essentially trying to make something not exceed or go below a particular area, or keeping it firm as well. All right. So yeah, you can anyhow dictionary can tell you what support means. And then resistance also, resistance is just a particular let's say something resisting you from getting to a particular area you stand. Is a form of resistance, can be called an obstacle, or yeah, anything at all that keeps a particular object from reaching a particular area, resisting. you know when we talk about forces, we have a resistance force, and also maybe an attracting force. So when there's a force that is resisting a body from continuing in a particular direction, and that's just what we call what we know as resistance, common English language, right? So moving forward, um when we come to trading, it's essentially something we can easily explain with the word ceiling and floor. Ceiling and floor, all right? Ceiling and floor. Okay, something like this. So just see this as a house. See this as a house, all right? A house. Okay, all right. See this as a house, and this is what the roof, the ceiling, and this is the floor, all right? So basically, support is the floor, resistance is the roof, the ceiling. Okay, when you throw up a tennis ball, when you throw up a tennis ball, let's look for something like a football, tennis ball, whatever this here. Okay. Um, let's I'm just trying to get something to demonstrate. Okay, let's just say we have this as a form of a tennis ball. When you throw this guy up, when it gets to this point, this area, it bounces off of this area and goes down. All right. When it comes down, it has to find what it supports, and then it tries to balance itself here. All right. And sometimes if the force that took it from here is has decreased, it probably stops around here. But if it comes up with a high force and then bounces on this, it goes down and bounces on this as well, and then goes up. You can imagine what's happening in real life scenario, right? Okay, I bet you can. So when it comes to price action, what you are definitely seeing is this. We're seeing price moving up, down. So we get something like this. Okay, imagine this is the path. So we are now drawing the path of the tennis as it's bouncing up and down. The path. Path. All right. Bounces up, comes down, bounces up, comes down, bounces. All right. So now, in as much as this guy remains in this range, all right, which obviously is a range, because we have the high and the top. All right, in as much as remain in this range, um, this area is depicted as a support. Why? Because you've seen that, okay, the tennis ball bounced off of this area and then got to the roof, comes down based on the applied force, the initial force that was applied. Remember, there was an initial force applied to this that took the tennis ball, all right? Like I said, it's tennis ball. So this is a tennis ball, and this is the pass, all right? We are just drawing the pass of the tennis ball, right? So as long as this force remains, as long as the force remains, it's not necessarily that it can start from the bottom. In fact, it can have even start from anywhere, all right, from here, and then finds the support after all. Okay, let's say a human stands here and then throws the tennis ball. So we're necessarily not going to start from the bottom, but the most important thing is that that particular area that market finds a reversal. So the particular area that the mark that a tennis ball finds what a support and reverses. So just imagine this guy moving to this point, coming down, bounces off of this place, all right, and then moving up, all right. So as long as it is bounced off of this place becomes what a support area. Now, for retail traders, in their perspective, they'll tell you that as long as it happens twice. So once it happens twice, this area becomes this base becomes what's significant. Why? Because we've had this tennis ball come to this level, this particular level, bounce on it, come back again, bounce on it. Why? It's indicating that there is what a flaw here. All right. So because in the case of the chart, you are not seeing any flaw or ceiling, a visible flaw or ceiling. All right. So the only thing that tells you there's a flaw or a ceiling is when you have the market bouncing on the same area, the same level twice. Just as in the case of this, you see the market comes to this area and then goes back and come back again for the second time. As long as it has happened for the second time, this place becomes what? The ceiling. All right, because obviously you can see reversal. So since it's over, since this is upside down, all right, the shape here is upside down, you can call the top a ceiling, and then the bottom rather, sorry, you can call it what, um a floor. Okay, so that's by the way, that's by the way. So essentially, this is what we know as what support and resistance. I think I've been able to, make you understand these concepts. So when you go to the chart, it's pretty simple. It's pretty simple. So when you come to the chart, all you've got to do is locate a particular area that price tested twice. We use the word tested instead of bounce. That word you would have used for bounce for a tennis ball is called tested. 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 When you are anticipating it, you say if price tests this area for the second time, I would call it my word support or my resistance. And when it is testing it at a particular moment, so price is testing this area for the second time, price will possibly hold here. And if in fact holds here, then this is what my new support or my new resistance. And I'm gonna be trading, and there are several confirmatory techniques that you use to ensure that you are not being manipulated, being faked, being, played in the market. Because yeah, market, it's not usually obvious with whatever he wants to do, even though it's a ceiling or a roof, it will still put some fear inside of you or some doubt, so that you don't get to make money, because the market is not designed for you to actually make money. So it's designed for you to lose money. And that is why you need discipline, self-control to succeed in the industry. So that's it. Moving forward. Um, so guys, moving forward, um, yeah, let's go to the chart so we can, demonstrate this. So looking at this area now, you discover that it just imaginarily, the guy who throws the football, or rather the tennis, threw it from here, or threw it, maybe um the guy standing here. Mhm. Can have a representation of a human being. Okay. Okay, let's say this hand can represent a human. So this is the hand of the person who throws the tennis ball, and then we have the tennis ball. Probably he used some force to throw it on the floor. All right, it comes to the floor, bounces on this floor, and then goes all the way up to these points, and then you know maybe there's a mini floor around here before the original floor, but probably not so strong, and then it bounced off it, maybe a board or something bounced off it, and then eventually coming down where there's no more support or a floor, an imaginary floor there, and then comes to this same level, all right, and then bouncing off, probably finding finding what's the resistance here. Remember, when he found a kind of support around here, he also found something here and reversed, because he didn't get to this particular area again. But then, just looking at this, we had it from here to this point, ignoring this little support and resistance, but looking at the obvious one, we had it here, and then bouncing off to this point again, and then coming down right back. Okay, yes, the market is not the chart is not a textbook, so textbook can be very, very ideal, but this is reality. The chart is reality. That's why you're having this in between the original, support and resistance. So because we already had this area, and then this area came to it for the what? For the second time. So we are right if we identify this stop as what? As our resistance area. All right. If we are identifying as our resistance area. Technically, we don't use a line. We use something like a square or kind of rectangle. All right, rectangle to represent, because um um unlike your real life ceiling or floor, which you can have like in a leveled form, the market is not like that. You could view it as a ceiling with contours, or with holes or something. I don't know, but having different levels within the same level. That's just it. Because it's not the market. It's it's not ideal. We just use the floor and the the ceiling to let you, have an imagination of what we are trying to say. Okay, So that's essentially what it is. But it's not like it's exactly. You can't have exactly. You can't have the textbook example on your chart. It's impossible. All right. When you come to chart, the things are usually not as it is on the textbook, not exactly. But the reason for the textbook or the reason for all of this is when you get to the chart, you are able to identify something that look like, okay, let's just say it's similar, something that looks like what you know in real life, all right? So this is human behavior we are doing right here. So human behavior is not constant, it changes. Humans evolve, and this actually talking about a whole lot of people in the market. So we can have this area as well, okay, as our area. Now somebody will say this guy got all the way to the downside here and then going back. Yeah, it happens. It happens. So even though you call this area um your area of what support, and you can see how this one is also dipping, right? Going below these areas, but you already know you have this one, two. Like I said, once you have one, two is area and area you should be looking at. Okay, for things like this, we're gonna be explaining this in time to come. Why you can have something like this price going below the area you've established as your area of support, but then rejecting back up. We'll call it rejection because if you can see that this candlestick, you know, if you have read the introduction, you know that this is candlestick. So this candlestick is didn't get all the way down to this point. All right, we have the candle ending here, but the wick coming all the way down. All right, you know that this is called the wick of a candle. All right, so yeah, I'm not really going into details of candles. Okay, so yeah, this is essentially what it is. We can still look at another example. We can still look at another example because this stuff I'm doing here is very, very important. It's very, very important. So you can have here and you have this. Like I said, yeah, they most times are not essentially on this exactly the same line, but they are on the same level. You can see so approximately on the same level. So you can see this and you can see this. You can see this as well and you can see this. So this area is known as what? Your resistance. Remember, this is the top, this is the bottom, this is your support one, two. All right. Okay. This is essentially what it is. So read more on this and then move to the next class, which we'll be talking about your major levels, which is essentially the same support and resistance. But this time around, I'm not going elementary. We are just gonna be showing you how you apply it to your, chart analysis moving forward. Thank you for your time and remain blessed. Very important.